Welcome back. CEAT is one of the stocks which has moved to the high point of trade, so just keep an eye out on that one. Also, we're all seeing some traction in all the travel and tourism related stocks. So Thomas Cook, for instance, has moved to the high point, was in the red for most part of today's trading session, has now recovered from the lows, currently at the higher end of today's trading session so far. We had Juniper Hotels as well with a 9% uptick. And if you're looking at hotels and tourism companies, look at the platforms as well. YatraOnline.com, for instance, is up about 4% from the lows and is in the green right now at the higher end of today's trading range so far. But the stock on our radar is Kararo India. Recent listing, the management joins us, reported a good set of fourth quarter numbers, but the entire year was fairly flattish. The margins came in healthy. The company said that indirect and direct export activity remains muted. Remember, that accounts for nearly a third of their revenue. So to discuss this and more, we do have Balaji Gopalan, who is the managing director at the company, joining in. Thanks a lot, Mr. Gopalan, for joining in. You've aspired to do 8 to 12% revenue growth in FY26. Could you tell us what are your aspirations in across your verticals? Agriculture, you have construction and domestic, because you believe that exports are going to remain subdued. So if you could break your growth targets up for us across categories and geographies.
Yes, sure. Thank you very much for giving me this opportunity. Very quickly, we are looking at 8 to 12% growth in the current financial year. This is driven largely by the offtake of certain products that we have introduced recently. These are not based on the industry growth targets that we have. We are looking at the segment in which we operate, which is growing. For example, in agriculture, you can see that the four-wheel drive market is picking up in India. It was around 2% about 5 years back, 6 years back. The global average in developed countries is 99% four-wheel drive tractors. And in India, we are currently at 22%. 1 year back, 1.5 years back, we were at 15-16%. So the penetration of four-wheel drive market in the Indian tractor industry is gaining momentum, and Kararo is a dominant player in the four-wheel drive axle. We don't work in two-wheel drive and mechanical gearboxes. We prefer to get into the higher technology ramp-up that is happening in the industry, and we are bridging the gap between what is there available technology in India with what is there globally. Kararo, with its 90 years of global experience and a legacy of experience in all soil conditions, we are able to give to the Indian OEMs a product of four-wheel drive technology that is well established and reliable and quick to market for them. They just have to pick it up from us, build the vehicle and launch it. So four-wheel drive is giving us a strong growth. We have acquired new businesses, new wins for the construction equipment as well in the teleboom handler business. This is at nascent stage, but we have got a very big contract of a supply leading to around 300 crores in 3 years. The ramp up has already started this year, and this is a fully export to one of the largest construction equipment player in the world. So these are some of the things that is adding up to my revenue and also to the export that we are targeting. All in all, considering the ramp up of four-wheel drive in India, the export that we have got for teleboom handler market, we are very confident of growing by 8 to 12%.
Okay. Mr. Gopalan, thanks very much for joining in. Just want to narrow in on this four-wheel drive in the agri segment. You said that it's increased from last year 15 to 16% of penetration to around 20 to 22% already. What are you projecting in terms of, say, FY26 and maybe 3 years down the line? And consequently, what would the revenue addition be because of this specifically?
Okay, see, we are not in a position to classify product-wise the revenue contribution that is coming in. It is a basket that we look at. But in any case, like I said, the four-wheel drive market is gaining strong momentum, and our target in the next 4 years, by 2029, we have a very strong commitment to reach 350 million euro. That is around 3,100 crore by then. And the factors that I explained, technology absorption is the kind of a go-to place for Kararo. And now the stage has come in India where the level of technology in the agriculture, that is tractors and construction equipment, is being absorbed very rapidly. And we are hoping for a kind of a pivot point where it will become very steep. Initial absorption seeding is taking place, and that is what is showing us result. 20% four-wheel drive in a market of tractor, which is 1 million, 10 lakhs, is quite a significant thing. And we expect this four-wheel drive to keep continuing to reach at least 40% in the next 3 years. And Kararo India is a dominant player. We have a significant market share of more than 60% in the four-wheel drive market. So that will give us the growth that we are looking at.
So from 20%, it increases to 40% over the next 3 to 4 years. You have a target that you've given for FY29 as well. Let's talk about the margins. Is there a differential between two-wheel drive and four-wheel drive margins? And you have a medium-term aspiration of mid-teens margin. Last year, you saw an improvement of 200 basis points. How much do you think can increase over the next couple of years? And by when do you reach that mid-teens target?
Okay. See, the growth in EBITDA is something that will happen step by step. Before going to that, I would like to pass the comment about the margin differentiation in agriculture and construction. Ours is a gearbox, ours is axle. The application is agriculture or construction, which thereby means that there is hardly a big difference between the margins. So margins will more or less remain the same. Two-wheel drive to four-wheel drive, Kararo is not into two-wheel drive. That is a very basic technology, and the fact that today we are doing well and the future is looking well is because of that technology change that is happening, and this will happen. If you ask me why am I talking about four-wheel drive growing more in India, that is because, as I said, the global average is 99% for the developed countries. In India, food security has become a focus area. We have to ensure food security, and for food security, the government itself is pushing for farm mechanization, farm efficiency. And the new trend that is coming into the Indian market is contract manufacturing in agriculture. To that reason, you need to take in four-wheel drive vehicles that can support farm mechanization. And that is the basis for us to evaluate and gauge and have a judgment that it will touch at least 40% in the coming years. Coming to the EBITDA growth, we are focusing on localization, which earlier was 67%. Today, we are at 77%. We should be touching 80% this year, and we are targeting 88%. Whenever we localize, we save a minimum of at least 10%, going up to 15% in the cost of procurement. Why didn't we do it till now? That is because the technology upgrade that is taking place, and that is the segment that Kararo specializes and works on. The technology was not available in India because there was no need for such technology. Now, with the growing market with higher technology, we are able to source it locally. International players have set up shop in India, so that is helping us in a big way in localizing. So that will add to my margin. We had in the past royalty payment to our headquarters, but just before the IPO, we got 154 IPs transferred into Kararo India. Thereby, the royalty to headquarters has reduced dramatically. Third, we are giving a very strong emphasis on cost control. Fixed cost remains the same. My revenue grows, and that brings in the margin that I am looking at. So it's a combination of all these factors that will give us, together with sales mix. Higher the technology, it's a black box, and I am able to quote a higher margin for those products, and there is a demand for such products. So these four aspects together will give me at least a 1% increase in EBITDA year on year for the next 3 to 4 years. During we are working on all initiatives to maximize our margins.
All right. So we're going to leave it on that note. Thanks very much for joining in and giving us all of that perspective. So around 8 to 12% growth is what the management is expecting, and around a 1% increase in terms of EBITDA margins for the next 3 to 4 years is what they are estimating. Export markets a bit subdued, but they are focusing on segments such as the agri space with the four-wheeler drive segment. Well, that's on Kararo India. That stock just about lower by around 1% We'll take a short break. Up next, we'll get you more on the markets and the F&O cues today.